beginners. So today we're actually going to be talking about candlestick. This is going to be a beginner tutorial into candlesticks. So we're going to be looking at first how candlesticks are formed, the different parts of candlesticks, maybe how to combine candlesticks, then how candlesticks actually relate with time frames. Okay, we're going to be talking about all of that today. So it's going to be a full tutorial, okay, on candlestick, basically the introductory part of candlestick for beginners. First we're going to do is we're going to go to my trading ebook, the FSB trading ebook, the intermediate trader specifically. Let's look at the introduction to candlestick there. Okay, then we're going to come back to the blackboard here, or the whiteboard, as you can see. Then we're going to I'm going to show you practically, okay, the different parts of candlestick, draw it out for you. Then we're going to go to the chart lastly to actually see it for ourselves. Okay, so moving on, this is the intermediate trader, the book you always hear me talk about, the intermediate version of my FSB trading trilogy. Okay, and of course, if you want to get the ebook, there's a link in the description where you can actually get the ebook directly from our seller page. All right, so we are going to be talking about candlestick, right? So starting from the basic definition, the candlestick is the language of the forex market. Okay, is the language which trading is the language of trading as a whole. Okay, so by definition, the candlestick is actually a kind of chart, okay, used to describe price movement of a currency. Now, if you're a beginner to trading, of course, you are new to all this, and trust me, you're going to see it soon enough. So, a candlestick is actually made up of 4 parts. It has a body, okay, an open, a close, and wicks. Now, some people is going to tell you that the candlestick also have highs and lows, which we are going to see as we proceed. Okay, so first let me show you a picture of a candlestick. So if you look here, you can see this is a candlestick. Now the blue one is a bullish candle. Okay, and when we say bullish in forex trading, we are talking about what? Going up. So bulls are going up. So let me do that here. So bullish is going up, while bearish is coming down. Okay, now you can actually change this color anyhow you want, but as a beginner, generally what we usually do in trading, we usually use the blue, okay, as a buy, while the red as a sell. Okay, so the bearish candle is the red one, while the bullish candle is the blue one. Okay, but you can actually change it. You can change it any way you want in your own chart. You can customize it by yourself. Okay, so this blue one is the bullish candle, meaning this candle was going up, while the red one is the bearish candle. Okay, so it has different parts, just like we said. We have what? The body. Okay, the body. It has an open. Okay, you can see it, an open. It has a close. Okay, a close. And it has what? Wicks. Now, these stuffs that stick out of the candle, they are called the wicks. Okay, so an open, close, wicks. Now, this wicks is now divided into what? Highs and lows. So the lowest one is the low, like the lowest point is the low, while the highest point is the high. So this to actually have definitions, just to go through it. It said the open of the candle is the point at which the candle starts forming. We're going to see it when we move to the whiteboard, right? Now the close of the candle is the point at which the candle stops forming. The body of a candle is the difference between the open and the close of the candle. Don't worry about the English, we are going to see it soon enough. While the wick is the line found on the candlestick chart that indicates where the price or stock have fluctuated relative to the opening and closing prices. Now, I'm going to go to the whiteboard and I'm going to explain, but take a look at these candlesticks again. Okay, take a look at them. Okay, you can see the body, the difference between the open and the close, right? While the open is the point where the candlestick starts forming, then you can see the highs and the lows, which is the wick. So let's go to the blackboard. Let me explain this better, or the whiteboard rather. So as we saw in the previous part, the candlestick has what? Has 4 or 5 major parts. So I'm going to make a simulation of a candlestick right now. Let's start with a bullish candlestick. Now remember I told you that a bullish candlestick starts forming and it starts going up. What it means is that when a bullish candlestick open, okay, or a candlestick is going to be bullish or it's going to be blue if it opens and starts going up. So if a candlestick is above the opening price, okay, the candlestick is going to be bullish. While if the candlestick is below the opening price, the candlestick is going to be bearish. Now let me simulate that for you. So let's imagine this candle. So this is a candlestick, right? You can see now this line you see here now is the open of the candle, right? This is where the candle start open. At that point is just black, basically. It's neither blue or red. Okay, but if the candlestick starts going up, the candlestick becomes blue. Okay, it becomes blue. Are you getting me? It becomes blue if it starts going up. So that is how the bullish candle is actually formed. But on the other hand, if the candlestick opens and it starts going down, okay, so let's say this candle opens now and it starts going down, the candlestick becomes red. Are you getting it? So this is the base of it. So a bullish candle is a candle that closes, okay, above the opening price. So this point where the candle open, okay, we call it the open of the candle. The price at which it's open, they call it the open of the price. While the price at which it closes, we call it the close of the candle. So the difference between this price, the open and the close, is what we call the body. Okay, just like we saw on the previous page. The same thing applies here. So this point now is where the candle opened, right? So this is the open of the candle. Because this candle came down, it closed downward, and that's why it's bearish, right? So this is the close of the candle. Okay, while in between it was the body of the candle. Are you getting it now? So now, as we proceed, sometimes candlesticks can actually make a very big high or low. So let's take these candles for example. This candle can actually come to this portion, okay? To this portion it was. Then before it closes, it kind of like goes back up. Okay, so let me simulate that for you. So let's say this candlestick open. Okay, this one I'm drawing now, it opens. Hold on. This one I'm drawing, it opens and it starts going down. Gets to this point. Okay, but before the ending of that time frame, which I'm going to explain soon, at the end of that time frame, the candlestick goes back up and closes here. Okay, this whole portion now that is below the candlestick, that the point, that is the point the candlestick have touched before. Okay, the point they have gotten to before is going to form something we call the wick. That is how the wick is formed. So it's going to leave something that looks like this. Are you getting it? So this is how this wick actually come about. That is that black line you saw actually come about. It's when maybe the candlestick was forming. Okay, let me do that again. Forming was coming down. Okay, coming down. But before it closed, it went back up. Okay, so that is how the wick is formed. So it leaves a wick. Do you understand that? So the same thing applies for what? For the bullish one. If this bullish candle now, okay, let's say it went up here, then before it closed, before the time frame elapsed, it came back down and closed like this. This whole portion, okay, above it is going to be something like what? This. Okay, so that's why we call this portion now the highs and the lows. So we call this portion now the highest points, okay, that the candle made. Why? This portion was what? The lowest point that the candle. So that's why we call it the low. We'll call this one the high. I believe it's making more sense now, right? So there are some situations whereby the candlestick can also open, that this candlestick could actually stay open, okay, open like this. But before the ending of that time frame, it comes back down. Okay, now I want you to mark out the exact point I got to before. Okay, that point. Okay, so let's say before this candlestick closed, before the ending of the time frame, it came back down and closed below. What is going to happen is that first, this candlestick is going to leave a wick here. Okay, it's going to leave a wick here to the highest point. Remember, then because it closed below, the underneath of it, that is after it, now it's going to be what? Bearish. Okay, it's going to be red. Remember, like I told you, that if a candlestick closes below its opening point, it's going to be a bearish candle. It's going to be red. While if it closes above its opening point, it's going to be what? It's going to be blue. Okay, so this wick you are seeing here now is telling us the highest point that the market made, or the candlestick actually made before coming out. So that's how these wicks are formed. Are you getting it? And sometimes the market can also, even when you feel like, okay, it was supposed to end here, okay, it can also do something like this. Make a very big move downward, but before it close, it come back up again. Now, as you must have guessed, it means that it's going to surely leave another wick here again for us. So you now notice that this will not be the high of this candlestick, while this portion where the wick stop will not be the low of the candlestick. So these black lines will now what? We'll call them the wicks. So this is how the candlestick basically is formed. This is how the blue and the red candles, they are formed. And this is how we got the different parts of the candle. So this is what, this here now is now the what? The open of the candle. So remember, for a bearish candle, the open is always above. Okay? The open is always up for a bearish candle, while the close is below. Okay? Why for a bullish candle, the open is always what? Below, while the close is above. Do you get that? So you see now that if we were to label this candlestick now, we'll call this one what? This is the high, this is the low. Okay, these are the wicks, right? While this is the body. So this place now is the open, while this is the close. So you are seeing how interesting is this now. So this is how candlesticks basically are formed. Okay, so remember, if the candlestick open and it closes above its opening price, it's going to be a bullish candle. You're going to see it for yourself, okay, because trading is very practical. Okay, while if the candlestick opens and it closes below the opening price, it's going to be bearish. Now, the wicks are what? Are basically the highest points. That is, it shows you that, okay, this is the highest point that this market made, okay, before moving or coming down. Okay, what it means is that what the wick is going to form when the market did not actually close at the highest point it make, but instead it came back down to close. So that is how this whole point now become what? The wick. So I believe you've gotten that right. Now, if you don't really understand, you can replay the video again so you actually get it. So another thing you now be asking is, okay, how does this candlestick actually relate to time frame? You must have heard of time frame. How does candlestick actually relate to time frame? So what you will notice as you start trading is that each candlestick you see here represents a particular time frame. I'll have different time frames in the forex market, starting from 1 second, safe. Okay, but the one you're going to see in your MT5 app is 5 minutes. Okay, in your MT5 app, you're going to see, let me delete all this. You're going to see 5 minutes time frame. Okay, you're going to see 1 minute also. So 1 minute first before the 5 minutes. You're going to see 15 minutes, you're going to see 30 minutes, you're going to see 1 hour, you're going to see 4 hours, you're going to see 1 day, and monthly time frame and weekly time frame. Okay, so you're going to see all this in the, but ordinarily in the forex market, you can even use 30 seconds time frame. Okay, but the point is that each of these time frames, okay, any candlestick you see represents a particular time frame, and it depends on the time frame you are looking at. So let's go to the chart first, or let's go and see this. Then I'm going to explain how it actually correlates. Okay, so let's just go to the chart. I'm actually going to call this video now so that it's not going to be too long. Okay, so the correlation between candlestick and time frame is going to be part of the second video. If you are watching this, I'm going to tag the second video right now so you can just continue from there.